Hey traders, this is Ron Haidt at Market Tamer. Happy Tuesday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We'll lead off here with the broad markets. SPY down a whopping 27 cents today. Still overall, the trend is upward. Same for the Dow, a whopping 69 cents, basically a quarter of a percent. You go to the Qs, was actually up a whopping 25 cents. We're still holding the 50-day SMA, which again is an institutional moving average. Something below there would catch my attention. That would definitely be a yellow flag for at least the tech-heavy NASDAQ. And then we'd start coming back down to maybe, some swing lows and then all the way down towards the 200-day. But again, across the board, even if we go to the MDY, which are mid caps, we're still lower lows and higher highs, which is the definition of an uptrend. There was a stock in the news, BMW, which is ticker symbol BMWYY. I got a question on this one too. It's a German stock, so you're going to see a lot of gapping because of how it's traded overseas. If I zoom in a little bit, you can see today's drop was pretty substantial, over 5%, nearly $2. It's now back at 30.89. Support here is at 30 bucks. And then if I go back something like maybe 2 years, you can see if we get below 30, then we come down to some of these other lows, maybe at 29. So there is some support, 30, 29, below 29. Then it drops all the way down to 27. We just want to go back to those last major swing lows. I talked about State Street a couple days ago and how it was breaking out. And I want to highlight the fact that, yes, it broke out. We had a continuation day, but now the volume is picked up and we're coming down. Typically, what I would like to consider is a 20-day EMA, which is a red line. We're below that. So that would be a stop out example. It's like, okay, think about getting in with a close of 87.92. Let's just say 88 bucks. The next day was at 89.5 roughly, even at 89.5. Well, now it's at 86.85. It's below the 20-day. This would be a stop out and say, you know what? The breakout looked pretty decent. Now it failed. The last resort for me, if I wanted to say, well, maybe it's some back and fill action. It's trying to figure out what it wants to do. You would go to the most recent low, swing low. And that low or that close there is 85.62. The most I'd want to give something like this is another $1.20. Because below the 918 low, now you could all fall all the way down here. So hopefully you find that helpful from an educational perspective, that if something tries to break out and it doesn't work, that's what I would look to. 20-day EMA, well, we're below that. Last resort, right there. How about something that's on fire, which is Square, up another 10+% today, big spike in volume. You can see we just blew out the previous highs. It's starting to trade outside its upper Bollinger Band, but for the most of September, it's been sideways to down. So this thing could easily keep riding those bands higher. Look at how the red and especially the orange line has acted as support ever since we got above them in May. Red and orange is the last resort. So until it gets below the red or the orange, this thing is still bullish to the upside. Twilio is up 5% today. It also just closed above some previous highs. And if I bring in all the data, just to show you on Twilio, you can see this is new all-time highs for this stock. What I would consider doing here too, I would use the red line. Close below the red line, your 20-day EMA, that will result in a stop out. Here's Acadia Pharmaceuticals. I talked about the big pop previously. Or I should say I wrote it down. I wanted to bring it to you. I hadn't. I wanted to see if there would be follow through. And now there is the follow through. That's what I'm trying to say. And now that we're above the 200-day moving average, that's the follow through I'm looking for. We've already filled this gap. Next target would be the gap fill up in the 30s. I'm not saying it's going to get there, but in terms of upside targets, 50% potentially. I mean, that's massive. Here is VC. This is something we have not looked at before. This is Visteon. There was a high in January, got sort of up there in June, rolled over, but then we bounced off the 200-day here. Then we tried to rally back up and got rejected. Once we fell below the 200-day, it has not been pretty. Instantly into a bear flag, could not stay above the red line, which is the 200, which is the 20-day EMA. And now we're rolling over. And if I go back 2 years on Visteon, I mean, there's a little support here, just over 90, maybe 91. Then you start going down to 80, 70. Some serious downside targets here, and OBV is also coming down with the stock. Please keep in mind, tomorrow, Wednesday, 12 noon Eastern, 9 a.m. Pacific, I'm going to be doing that webinar on the hottest stocks for year end. If you guys want to know how I do my due diligence, how quickly I can just grab some stocks and say, wow, these are the ones that perform the best. These are the ones to avoid. I'm going to show that to you Wednesday at noon within minutes of going live. I'm just going to pull the curtain open, let you see it, and you're going to see the power of sector rotation, of seasonality, how magically these stocks just trend lower or trend nowhere fast, and then boom, that particular week or that particular month, they get shot out of a cannon and start soaring higher. So you can register for that webinar. It's completely free. Below the video, I'm also going to send out some emails too. There's going to be a 500-seat maximum. You've got to be there to see it live. I'm not going to record it. All right. I wish you guys a fantastic rest of the week. I look forward to seeing the next video and also in tomorrow's live event. Take good care, folks. Bye-bye.